Welcome back. Today I'm going to go through a Redfin article, and the headline is "Home Buyer Demand Improve, but Tariff Turmoil, Rising Rates, and Economic Jitters are likely to hamper sales in this supposedly a robust spring housing market season." But it's not happening. I don't see the optimism. I don't see the robust. I don't see the excitement of the spring housing market transaction. And the reason why are as follows. So here it is. Home buying demand improved at the start of April. However, if you have not noticed already, according to the Mortgage News Daily, the mortgage rates have gone back up to above 7%. So this is a very terrible news. And the mortgage application improved slightly when the mortgage rate were back to 6.6% at the first week of April. Now it's back up to 7%. So you will see in the next few weeks, the mortgage purchase application is going to come down again. So now you see the volatility. Per this particular paragraph right here, the improvement in demand for housing is not going to last because the mortgage rate increase, like I just told you. The mortgage rate is increased recently is due to economic turmoil, and the Fed making it clear it is not cutting interest rate more than previously expected. So new listings are rising, pending sales are falling despite more homes being listed for sale. So just because more homes are being listed for sale does not mean pending sales are increases. New listings are up 10% annually, one of the biggest increases in a year. Supply is up partly because many homeowners who have been considering selling are listing now in hopes they are able to pocket their equity before potential economic downturn. People fearful of economic downturn, go figure. The only thing that's certain about mortgage rates and the housing market right now is extreme uncertainty. All right? So let's go over some additional data. The mortgage rate, the 30-year fixed rate mortgage right now is already 7.07%, not 6.95%. The important mortgage purchase applications is up 20%, but like I said, it's going to go down in the next few weeks. Let's go over the median sales price on a week ending 6 April is 386K. In a year over year, 2.5% increase year over year, smallest increase since October of 2023. Medium asking price is 426K, and the medium mortgage payment is 2813, but it's going to be higher because of the higher mortgage rate at 7.07% as of the date of today's recording, 14 April. Pending sales is slightly below year over year, smallest decline since the start of 2025, a few months ago. New listings has increased 10.3% year over year to 100,661. Active listings have increased, well, so we're getting more inventory. So we're seeing a little bit of a balance, a healthy, realistic market, if you will, because of we need more inventory. We have a home sales crash transaction in the past 12 to 24 months, in case you have not heard. And months of supply is 4 months. 4 to 5 months of supply is considered a balanced market with a lower number indicating a seller's market conditions. Lower number at 4 months, we are right in the cusp of still a seller's market. That means there are more demand than there are supply of homes. As a result, it would put upward pressure on home prices continue to increase. What housing crash? Share of homes off the market in 2 weeks is 39%, down from 41%. Medium days on market is 43 days, up 6 days year over year. Share of homes sold above list price is 25.1%, down from 28%. And average sale to list ratio is 98.6%, down 98.9%. So let's go over the medium sales price on the biggest metros with the biggest increase year over year increases are in Cleveland, Milwaukee, Newark, Nassau County, New York, and New Brunswick. So basically the Midwest surprising or the medium sales price or increasing because of a lack of supply versus the demand. And metro with the biggest decreases in medium sales price year over year is Indianapolis at minus 4%, Jacksonville, Florida, minus 3.3, Montgomery, Montgomery County, Pennsylvania, minus 1.6, Dallas minus 1.3, Tampa minus 1.1. So it has declined in 8 metros. 8 metros out of 400 metros, medium sales prices have decreased, be it minor, nothing. No, nothing to be concerned about, at least for the time being. Pending sales, once again, the Midwest. Let me just categorize these areas as the Midwest. The pending sales have increased accordingly, some double digit, some are high single digit, and the pending sales have decreased in the Sun Belt area, mainly Florida and Texas, and a few other areas, in Vegas and all the other places, but mainly in Florida, where the pending sales has decreased on a double-digit basis. It has increased in roughly half of the metros. New listings have increased at a double digit in Phoenix, DC. Not surprising, DC, right? Because of the federal job layoffs in the area. So people are trying to sell their homes. People are somewhat panicking Washington, DC area because of the Doge layoff triggered by Elon Musk. And of course, as you can see, mainly in the Midwest, new listings has increased at a double-digit level. And the Sun Belt, like I said, are typically Texas and Florida and a few other Sun Belt places. New listings has decreased year over year. So let's go over the medium sales price. Medium sales price has increased 2.5% year over year. As you can see, from 2022, the medium sales price were quite low. Back only a couple of years ago, the medium sales price were only like middle 300, 320K, 300K, around 300,000, 330K. Then year over year, 2022, 23, 24, medium prices continue to increase, and year over year increase currently, which is, like I said, around 386,000. Despite all the concern and volatility and all the negative news, medium sales price continue to increase, be it very minor increases year over year for the past several years due to continued demand exceeding supply. Economics 101. When there's more demand than supply of inventory, home prices will increase, at least on a nationwide basis. As you can see, median asking price has increased year over year 6.5%, has increased pretty consistently in the past few years. This chart is pretty troubling. What I mean that is that look at just like back in 2021, 2022, the average mortgage payment on a median price of home in the U.S. was around $1,600. And you fast forward 4 years, the median price is $2,800, almost $3,000. We're talking almost double in the mortgage payment. So for those people that 4 years ago keep waiting to buy a house, thinking that the housing market is going to crash or the mortgage rate is going to come down, or the home price is going to get lower so they can qualify to buy a house, well, they missed the boat. So instead, the mortgage rate kept increasing steadily in the past few years. Home prices kept increasing for the past few years. And that's those people that are sitting on the sidelines try to buy at a perfect moment. Well, they can't buy anymore. They cannot afford it. So we're at a historic 40-year low in home affordability. So a lot of people's American dream is being severely impacted due to the skyrocketing of home prices since the onset of the pandemic 5 years ago and the elevated mortgage rate. So this is very sad, and I don't see any relief in sight given what's going on with the tariffs and economic uncertainty, the mortgage rate increasing steadily, and inflation, and all the stock market downturn, the whole 9 yards. It's just things are very volatile, to say the least. Active listings, we have to monitor the active listings, how many homes are coming into the market. Some fairly good news is that the active listings have increased 11.4% year over year to 984,000. The active listings have increased pretty consistently from 2022 to now to 2025 at almost 1 million in sales. And you're thinking maybe there will be more supply than demand in the marketplace, but we're not even close to the pre-pandemic level of active listings. The pre-pandemic levels of active listings is around 1.2, 1.3%, 1.3 million homes. Right now, we're not even close to 1 million. So we are still in a seller's market. There are still more demand than supply of inventory, even though there are more inventories coming into the market on a consistent basis for the past 4 years. Does that make sense? We're getting to the healthy market situation. We're getting to the balanced market situation. So things are getting better, but still we got a long way to go. Now we have 4 months supply of available on the market. So supply inventory have increased pretty consistently over the past 4 years, but we are still at a seller's market because a balanced market is 4 to 6 months. We're at 4 months supply of inventory, still a seller's market. Still, there's a shortage of homes to buy. Still, there's a housing shortage. The demand is still greater than supply as we speak. The average home are sold for 98.6%. So the homes are sold for a little bit less than 2% less than the final asking price. So a lot of sellers have to reduce their prices before they're able to sell their homes. All right. That pretty much concludes this particular video. So my recap is such that there's some positive signs in terms of available inventory and active listings. So moving forward, we are moving into a balanced, healthy market. There's more houses for us to pick. However, on the negative side, we still have a lot of uncertainty. We still have an elevated mortgage rate, and it's very hard to afford a house these days, as I stated to you. And on top of that, with the tariff, with the inflation, with all that things going on with the stock market coming down and mortgage rate, we are seeing potential recession as well with the global financial crisis that's all happening right now that can potentially affect the housing market. But it's not all bad news. If your financial situation is very stable, if you have a long-term perspective, if you qualify to buy a house, and if you intend to stay at your house for the long term, hey, there's no reason why you shouldn't take the plunge. So you cannot time the market. So life goes on. If you have a life situation such that you need to buy a house, then go ahead and do it. Don't allow this economic uncertainty to affect your long-term life financial decision, such as buying a house. That's all I have to say. If you receive any value from this video, please like and subscribe to my YouTube channel, and also comment below what are your thoughts about what I said so far. And also, one final thing is please put your email on my website below, so you can become a free member of our real estate investing community. And so on a weekly basis, several times per week, you will receive free contents directly into your emails, so we can teach you for free how to become a real estate investor. Thank you so much for watching. I'll see you next time. Have a nice day. Bye-bye.